Welcome back to Bonex Investment Group. In this video, we are going to talk about one of the most powerful gold scalping strategies. I would say this is one of the best trading strategies that I have ever shared on public. If you fail to make money with this one, then I don't know what you need to see before you start making money. If you're new, join our free Signals Telegram channel. The link is right in the description box below, and come back so that we continue with the video. Alright, so basically we are going to be utilizing the silver and gold structural relationship. These two assets have a relationship, and I actually commanded AI to produce me this image so that we may have that relationship imprinted in our minds. So gold and silver have a relationship in their movement. This is the first principle. We must understand that these two actually moves similarly. This means we must always have the gold and the silver chart. And for the purposes of those who do not understand, by gold we are saying it's XAU. It's XAU against a USD, right? And silver, it's XAG against USD. So these two charts should be opened right away simultaneously. So this relationship is going to be our basis for our scalping strategy. The entries that we are going to be taking are basically going to be made after we confirm the relationship of silver and gold. So let's have these charts opened at once and move to the next part. So basically, the points of opportunity are these ones. So the relationship between these two assets is an opposite interest relationship. We are saying when gold gives us a structure whereby we have two legs, like in this particular instance, silver, and having this instance, we are actually expecting a rise on gold. So if gold rises, like what we are seeing, it's a move, a higher lows, like in this particular case, and silver drops, it's a home run, and we tend to see gold keep on rising. The opposite is also true. If gold drops, like in this particular case, and silver rises, it's also a home run, but we do what is being done on gold. Basically, we want to see these two diverge amongst themselves. When they do so, they're actually confirming that particular direction of gold. However, if rules are not put in place, we will see this being subjective and won't able to apply it in real markets. So let's explain more. All right, so basically we are going to employ the TDI. That is the only indicator that we are going to use. TDI is basically an indicator which measures volatility as well as sentiment at the same time. You can use BTMM TDI on TradingView. It's actually free and you can install it on your charts. So the TDI is an indicator that simplifies this. When we see a shark fin on gold, right? For instance, a shark fin is this particular piercing out of the RSI line outside the bands. When we see this shark fin on gold, it helps us get ready for the point of entry. Therefore, a point of shark fin tells us to check for gold-silver divergence. When we see a shark fin, it's time for us to check for gold and silver divergence. So shark fin is seen on gold, and when you see a shark fin on M5 time frame, which is the time frame where we will be scalping from, you now need to check silver. So since we have explained the small details, let's now have the full strategy explanation. So we are saying to buy, we need to see a TDI shark fin below the bands, right? Below the bands, and then check for divergence of gold and silver. So we need to see probably something like this. This is either this is gold or this is silver, but there should be divergence for us to go the long that has been said by the TDI. Or it might be something like this on gold, and on silver it might be something like this. There's also a divergence like that. So if this is the case, it is confirming for us to buy. So to sell, the TDI shark fin must be above the bands, then check for divergence of gold and silver. Same applies with what I've explained. This might not be clear to you, or you might not understand what I'm trying to put across. So let's explain this on the charts so that you fully comprehend. Let's jump over the charts. Before we go over the examples, let me quickly show you something powerful. Our profitable trading algorithm called Stophunter Pro. This trading robot took a small $1,000 account and grew it into over 500,000 in just 5 years. It's designed to catch the exact stop hunters market makers use. Here's what you could have got on a $100 account. We are going to use the previous quarter, which is May 2025, right up to the time of recording this video, which is 18 August 2025. So I'm going to start off this test right in front of you so that you'd see we are risking 5% of the $100, and this is what we were going to get. $100 initial deposit, and then we were going to get 291 is our profit. Here is the profit by month ratio. If you need this particular trading robot and you're serious about leveling up your trading, fully automated and no stress, no emotions, use the link that I've left in the description box below to get your 249 lifetime copy. All right, so on this chart, I have two charts opened. On this particular side, it's gold. XAU against USD M5 time frame. For those who keep on asking in the comment section, what time frame are we using? This is M5, 5-minute chart, right? So on the 5-minute chart, we've said we will be scouting for a TDI shark fin. And whenever we see a TDI shark fin, the next thing is now for us to look for divergence, right? So in this particular case, we can see there was a TDI shark fin that was issued corresponding to this particular point, right? If we are to look at this particular point, this particular point is similar to this zone, and then after that we saw this divergence dropping and rising like that, right? This is actually a current signal that we could have taken if we were actually up during that time. If we look at this particular time, this is 3:15 on the 29th of August 2025, right? And then if we check on this particular side, we can see 3:15 is at this particular time, and here what do we have? A TDI, and after that TDI was issued, a TDI shark fin was issued, the next thing was actually for us to look for divergence. We can see they were making lower highs, right? Lower high, and then here they made a higher high, meaning there is divergence. And after this divergence, the TDI signal line, which is in red, and RSI line, which is in green, will give you a point of entry. So your scalp entry was going to be at this particular point. You are going to be at this particular point. It is unfortunate that this particular trading strategy is difficult to go past in history because it is a back and forth. Since I am using two charts, it's unfortunate I cannot synchronize these charts to be at the same time over and over again. But however, I'm sure you've actually understood how you will be doing. Next, in this particular case, all that you are looking for is a shark fin on gold M5 chart. When that shark fin has been issued, look for a divergence between the two, silver and gold. If you find the divergence, then you can enter that scalp without fear. Look to get a 1.5 R against a stop loss that is above structure of entry. On that note, we've come to the end of our today's video. Thank you for watching, and if you want to learn more, join the one-on-one. I'll leave the link in the description box below.